Hey everyone, it is Evan here from the Trade Risk on Tuesday, July 31st, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So let's jump right into the action here with the S&P 500 cash market weekly time frame. That is what we're looking at right now. Each bar represents 1 week worth of trading, and it is only Tuesday, but so far we are now at the close here on Tuesday, just about flat on the week, slightly down here, 0.09%. If we zoom in and look a little bit closer at this week's candle, what we can see is we get a little bit of a tail here on the bottom end of it. So we did start off with some follow-through selling on Monday, and now on Tuesday we reclaimed, we popped back up, and we retraced much of Monday's selling, and that has put us just about flat here on the week, and we sort of retested last week's lows and this 2800 level in the process on Monday, and it did hold so far. Now, when we kind of zoom out further here, structurally, nothing has changed so far this week. We are still trending above a rising 8 and 20 period exponential moving average here on the weekly chart, and we are still holding above this 2790 to 2800. That was prior resistance multiple times, significant resistance from back earlier in 2018, and now we are still holding above it. It is acting as support, and that is the area where we really want to pay attention to see if this market can continue to base and hold above, to see if the bulls can defend us above this 2790 to 2800 area. So that is the longer term chart here. Not too much interesting going on, not too much new behavior here. Let's go down to the daily chart. Remember, it is the last day of the month, so as always, check out those monthly charts. We do have monthly closing charts for July now to take a look at. We're not going to look at them in the scope of this video. We're going to go down to the shorter time frame, the daily chart now, and we're going to look a little bit closer as what has gone on here. And when we look at this action recently, we covered this in the weekend video, but Friday was the first sort of loud day by the sellers. We didn't really have any structural damage on Friday, but we did put in a bit of a pullback here. We lost about 66 basis points here, a little over 0.5%. We broke below Thursday's lows, and we retraced much of Wednesday's sort of excitement bar to the upside, and we lost the highs here from Tuesday. That all happened on Friday. Still, we were above a rising 8-period moving average, a rising 20-period moving average, and it's really on the sellers to get some follow through, get some conviction to see if this was just a one-shot day or if we could get some legs to the downside. And they did get some follow through. That was Monday's session. We did sell off yesterday, 58 basis points to the downside. We came right into support, a 20-period exponential moving average, and the top end of this 2800 level that we've been talking about for the past couple of weeks. That proved to hold as we did pop higher today and reclaim most of Monday's selling pressure. So as we look ahead now at the S&P 500, we could use this trend line here from the July lows, the end of June lows, and if we just draw this as a slope of the ascent of this rally here over the past couple of weeks, you can see we did get a follow-through move below that on Monday, and now you can see we're sort of back testing it. We're trying to get back on that path here on Tuesday's action, and now going into Wednesday, we want to see, can we get more follow-through to the upside? Can the bulls reclaim, get back above this trend line, get back on track, hold above these moving averages to repair this damage, to hold on to support, and to continue this trend to the upside. So this loosely drawn trend line here is something you could pay attention to. I still am very much a fan of horizontal levels, and the horizontal level to the downside, the big elephant in the room, this 2790 to 2800 level, that is where I would want to see this market hold if it is going to hold up. On the flip side, if we're going to break down, that's the area where we should be paying attention to. And speaking of this potential this trend line reclaim, if we do rally, say tomorrow or even into Wednesday or Thursday, if we do not get back up to these highs here, if we put in, say, a lower high, so maybe we rally back up to 2840, 2835, and we fail right in here, and then the market starts to roll over, giving us a potential lower high, then we again would just want to be paying attention to, say, Monday's lows, this 2800 level, to see if it will hold. Right now, it's kind of a a mixed bag here. We're still on trend. We're still trying to hold up with this horizontal level still holding, and we're still trying to fight to keep this trend alive. So a little bit of mixed signals here for the S&P 500. Started the week off with some selling pressure, bounced back here on Tuesday. Looks like the market could start to roll, but it hasn't quite happened yet. So let us see how the next few days and how this week finishes up here for the S&P 500. I think the levels, at least to the downside, are pretty clear to pay attention to. Now, the IWM was one of the more interesting, one of the more telling, sort of leading to the downside indices here last week, where we got two high volume and expansion in range downside days. It started with Tuesday of last week with this bearish engulfing bar on heavier volume, and then on Friday we got another expansion in range. We broke through support and we did it on high volume again. This was our signal to get short here on Friday as we started to break this support. We are still short on the IWM. It did have a break, a bounce today, but it is still, in my opinion, in a tough spot, given the fact that this day is still in control in my book here on Friday. If the bulls can start to get us back above 167, if we see meaningful follow through to the upside tomorrow, if we get more follow through, more confirmation to this bounce like we saw here on Tuesday, north of 167 or so, and start holding that, that would be my cue to probably take this short off, book the loss, and just wait for a better spot, perhaps wait for it to fail and roll back over if that is the path that this will take. Or maybe this was the final shakeout here, and if we get a nice high volume move back up into this range, again, for my style, or at least the setup that I am trying to capture here, would no longer be in play, and I would move aside if we could start to reclaim and get back into this range. So currently short, but a loosely held position. If again we get a nice move up tomorrow, then you should expect that we would be out of that short position for that particular trade. So IWM still vulnerable and still suspect here. Let's see how it acts tomorrow. If we go to the Qs, this did get a more meaningful follow-through day yesterday, and we really did not reclaim as much. We had an inside day today, but what was interesting about Monday's session is we did get more of a confirmation of a breakdown of this trend line, and we lost this horizontal level. These were the highs from June here. So this has quickly, quickly turned a little more to the bearish side here for the Qs. We do have Apple that just reported earnings after hours. I'm recording this after they have already come out, so you do notice here we do have a bit of a gap here. We do have at least initially positive reaction out of Apple, so it'll be interesting to see if that is enough juice, if that is enough of a momentum move to the upside here to start to repair some of this damage. But for the Qs, I don't really like the positioning here at all either. It's kind of similar to the IWM. We are now below a 20-period exponential moving average. We're below this horizontal level of support. We're below this one here at 180, so this is where we broke out from briefly. We broke down below it. We broke down another level. So these are all what I would consider more shorter term tactical levels. If we look at the weekly chart, things are still pretty much intact here. But for you tactical traders, for you traders that are looking a little more acutely at these levels, this is what would concern me. I'd want to see us back above 178 to the upside, closing above that on the daily chart. That would give me more confidence here that the bulls do still have a handle on in this market. The longer we hold below 178 on a closing basis, the more suspect I would be here for the NASDAQ 100. So that is the market environment overall. We got a little bit of mixed signals here, but the market kind of skating on some thin ice here for the shorter term levels. For the S&P 500 though, the big elephant, again, 2790 to 2800, that is where I would be paying attention to for that more intermediate term inflection point. So that is the environment. Let's go to some other markets here. TLT moving sideways, just really tight over the past 5 or so trading sessions. It did break down from this trend line. It's firmly back in this sideways range. Really not that interesting. I mean, I do like the fact that it's tightening up here, but it is in no man's land in terms of trend. It's just moving sideways in this larger structure. So really, you're going to be looking at the extremes, 117 to 123. We're in the middle of it. So whether or not we resolve back to the upside or back down to these lows, that is yet to be seen, but I think that would be the bigger move that I'd be paying attention to if I was playing that. USO had initially this nice move back up to the top end of this channel, but it gave that all back. It's kind of the inverse of the market. The market really took a dive on Monday, then rebounded today on Tuesday. Well, it was just the opposite for oil. We saw a nice push higher yesterday, and now it dove to the downside and threatening to potentially break down from this what could be a bear flag, but at least now it's just this rising channel that it's been in for the past couple of weeks. If we start to lose and get follow through below today's lows or 1420 or so, that looks like potentially a trigger to the downside, and we would pay attention to, say, 1380 back here on the pivot low from mid-July. Finally, metals. Let's look at GLD here. Still not doing a whole lot. A little bit of volume coming in, trying to reverse here, trying to stabilize. There's some signs of at least moving sideways and stopping the damage to the downside. The trend, though, is still lower, and it's on the bulls to really prove themselves here. It's still not a market that seems all that interesting to me, and silver is really the same exact story. It is stabilizing here. It's trying to catch its breath. It's trying to stop the bleeding here in this downtrend, but it's going to need to prove itself a little bit more. For now, let's see how this consolidation shakes out here, moving sideways. In my opinion, the longer the better, and that would give us more confidence on the next directional move here in the metals. And that is it. That's all I have for this week's video, or this midweek video. Check back with us on Friday for the weekend market recap video, and we should be here tomorrow for some trade ideas on our usual Wednesday trade setups video. So thanks so much for watching. As always, do subscribe to our YouTube channel if you like these videos, and I will catch you next time.